We're going to continue with our cost reduction exercise to preserve capital and make sure we position the business in such a way that we are ready to capitalize in a rebound on the market, which is inevitable.
Atlantic Lithium has announced some changes to its leadership structure as it continues to build momentum for the delivery of Ghana's first lithium mine, the Ewoyaa Lithium Project. Joining me now to discuss all of those developments taking place is Atlantic Lithium CEO Keith Muller. Keith, some major leadership changes are set to take place in the coming weeks. What can investors expect in that regard?
Well, Fahad, the rationale for the changes are really twofold. Firstly, it's a natural progression and evolution of where the business is currently at in its development cycle. And then secondly, as part of our wider cost-cutting strategies, we're also looking at reducing corporate costs by as much as we can, and this really plays into that as well. So in terms of what investors can expect in the short to medium term is firstly, our highest priority is the ratification of our mining lease. And then secondly, we're going to continue with our cost reduction exercise to preserve capital and make sure we position the business in such a way that we are ready to capitalize in a rebound on the market, which is inevitable. And then lastly, to strategically navigate our way through this very challenging low price environment, even though Ewoyaa has a very low all-in sustaining cost. At the current prices, there's just no incentive for investment here. So our task now is to find ways of further reducing our all-in sustaining costs to make sure it's a viable proposition.
You very rightfully mentioned costs there, Keith, and I believe these actions are reflecting Atlantic's commitment to reduce costs even further and increase operational efficiency ultimately as you progressively focus on your resources at the Ewoyaa Lithium Project. What is new at the moment at Ewoyaa? Where are we at? If you can give us a bit of an update in that regard.
Sure, Fahad. So for us, all the heavy lifting has been done at Ewoyaa. Now that we have our EPA permit as well as the mine operating permit, our focus is really centered around project critical activities and to maintain our licenses and permits. We've also actively been engaged with the government to really talk about the fiscal terms and in light of where the spodumene prices are sitting at the moment. And we've been encouraged by the pragmatic way in which they are sitting at the table with us. My expectations, although we can't promise anything, is that a revised mining license will go to Parliament in the sitting that it's currently active, and that ends by the last week in August. So hopefully we see some news in this respect in the future.
So how far into those talks with the government of Ghana are you? Are there any further talks that are set to take place?
At this stage, we've concluded our initial discussions. It's now going through the bureaucracy of making it to Parliament, as well as going through the select committee. So we're expecting for that to conclude relatively soon.
You mentioned the lithium price recovery. When do you expect this could happen?
Well, the levels where we're at today was last seen in mid-2021. And that was really driven by a surplus in supply, by the unprecedented pricings that we saw late 2022, early 23, when prices were between $4,000 and $6,000 a ton. So where we are sitting today, we're well into the cost curve and very much below any incentive pricing. Everyone in the supply chain, miners, converters, as well as cathode manufacturers are all struggling to break even. And then on the demand side, we continue to see double-digit growth. This year alone, we're expecting about 1.5 million tons of LCE to be consumed. When you compare that to the levels in 2021, when it was only 750,000, we've seen a double consumption rate increase in a couple of years. That is expected to double again by 2031. So it's really a fourfold increase from where we've seen them in 2021. So these prices we're sitting at the moment is just not sustainable, as it doesn't incentivize new development, nor does it promote the expansion of existing operations. So the key industry analysts are forecasting that there'd be a supply-demand balance by late 2026, which we think is probably about right, which perfectly positions Ewoyaa to capitalize on that rebound in the market.
Keith, you also mentioned your exploration activities in Cote d'Ivoire, and I noted the recent announcements you released on this. Can you tell us more about what Atlantic Lithium is undertaking in Côte d'Ivoire?
So look, our priority remains the development of Ewoyaa. However, we got to recognize that, Ewoyaa's got a 12-year mine life, and what are we going to do after that? So we're starting to work on a pipeline of projects to fill that supply gap in the future for us. So we obtained these licenses in Côte d'Ivoire in May last year, and we've been working that pretty hard. It's just over 770 square kilometers all up, two licenses, Aquaville and Rubinon, which is 100% owned by Atlantic Lithium. And which is really beautiful about the location of this is it sits right on a corridor, and it's about 80 kilometers from the port of Abidjan, which is a bulk export facility in Côte d'Ivoire. We found both outcropping and floating spodumene. We've done thousands of swirl samples, and we've seen significant swirl and lithium anomalies, which we are now targeting to complete that analysis, get those test results back from the lab so we can see what the regional picture looks like. And then our intention is to design an auger program so we can systematically test for drill targets, very much the same as what we did in Ewoyaa from 2016.
Quite a few updates there. Keith Muller, thank you so much for your time.
Thank you very much, Ryan.